All right, baby, we on, man. What's up, good people? It's your host Barry Bonds, and we're here with Bondzgems. I got two of my brothers here with me. I need y'all to introduce yourselves, top to bottom. Marcus, you can start right there. Let's
What's going
go.
on? What's up, y'all? No, I'm Marcus Leslie, man. CEO, Elevator Underground, and portfolio manager for Marathon Capital Investments.
Let's go, brother Kevin.
What's good, y'all? It's Kevin McKinney, CEO and co-founder of Marathon Capital Investments.
That's right. Y'all might see Kevin on the other podcast, Smoke Talk. But
that,
this is the good side of Kevin right here. This is the good side right here.
that
You know,
was Goldie on Smoke
that's
Talk.
Goldie, yeah, Goldie and Bleak, both of these guys, man. Legendary people. But yeah, with Bondzgems, we're gonna do this I Talk Money version. I'm gonna try to keep this continuous and have different people on here, and definitely have y'all two on here because I learned a lot from y'all about stocks. So I just wanted to ask a couple questions tonight to get it going and see where we could take
Mm,
it. So the
let's
first
do it.
question I got for y'all is this is a question that's going around a lot right now is what impact do you think Trump has on the stock market right now?
You
Goldie,
want
I'm
to
gonna
take
let
that
you go
first?
first. Yeah, I'm gonna let you go first, bro.
Okay. I think the proof is in the pudding already. If you take a look at the market since President-elect Donald Trump was won the election, the S&P, actually the overall market has just been shooting through the roof. So I think that gives an inkling of what we're going to see in the future. Also, keep in mind that we are not stock or stock professionals, and we are not um, financial planners. So all information that we will be given today will be just for educational purposes only. Do your own research and go make sure that you talk to a professional um, prior to. But yeah, for me, especially as you can see with Elon Musk being added to Donald Trump's cabinet, we see the effects of it on Tesla. You know, Tesla is actually going through the roof right now, and I have some of it, and I'm not complaining about it. But I mean, of course, as we know, Republicans are in office, and I know I'm sure Marcus can touch on this. A lot of times people focus on the person and not the administration, and knowing the principles of the administration and what they're known for, what their ideals or visions are. So I think that you're going to see a lot of increase, a lot of record highs and things like that going into the stock market, especially things that are in alignment with the Republican administration, a lot of Trump administration and the cabinet that's around them. So I'll start it off there and then pass it over to Marcus so you can pick up off of that.
I love that. I love that that piece of information and advice. Again, we are not financial advisors. I have a different financial investment strategy. And so I think, first of all, the most important thing is you always have to understand what is your risk tolerance. Um, what is your strategy? How are you trying to invest? Um, as they say in my favorite show, The Wire, they always say the game is the game. So for me, I don't think that who won actually matters at all. It really depends on what sector you're trying to invest in. So
Very true.
depending on the administration, different sectors are going to be impacted. Like you said, you see with Tesla, okay, well, he has a obviously that stock is going to soar because of the collaboration between him and Trump. But the game is still the game. The rules are still the rules. You buy good companies. Understand what you're buying before you buy it. What is your investment strategy? Are you a dividend investor? Are you a capital gains investor? Are you diversified? What sector are you trying to be invested in? Are you diversified enough between that sector and other sectors? So the game is still the game. I don't think that money in itself is going to be impacted with Donald Trump being the president. I think the way you invest and what you invest in is going to be impacted. So at all times, you should be balancing your portfolio. At all times, you should be weighing your risk and evaluating how much risk you have. I mean, you should always have good companies, safe companies. If you want to take a high risk investment, do that, but understand where that company is in the market. So it's just simple as that. I don't think the game changes depending on the president. I think that the game is the game.
I asked that because that's a big topic. You know, I mean, you
Yeah,
did see that when he won, stock shot through the roof.
yeah.
So a lot
But
of people speaking on that.
everybody kind of looked at him like, okay, Trump, we want Trump in because he's a businessman. I'm not a politician and I don't really do politics. All I know is that yes, the stock market is going to soar when somebody whose aura is that becomes the president. But the game is still the game. Where's the world going? I'm a strong believer in investing in where we're going and not where we are. That's what investing is to me.
Gotcha. So to spin off of that, Marcus, how do you identify stocks for investment? Like what are good stocks? How do you
Well, I
identify?
would say it has changed. It has changed over the years since I actually learned more. When I first started investing, like on a serious level, I started real simple. I just started looking at the products that I use, and then I tried to figure out who owned them.
Mm,
It's like, oh, I use an iPhone, so let me go look at Apple. I shop at Walmart. Let me go see what's up with this Apple stock. I mean, with this Walmart stock. You know what I'm saying? So for me, on the simplest level, when I started, I just started looking around my everyday life and looking at what I use. You know what I'm saying? One thing I need every single day is gas. So then I start looking at petroleum companies. Like, okay, which one of these companies should I be investing in if I want to invest in petroleum? The number two product in the world after petroleum is coffee. You know what I'm saying? So
Mhm.
which coffee stocks can I invest in? And then from there, I started asking people that were already in the market and just kind of getting game from them about how they try to find stocks. Um,
mm.
and one thing they always said is while you're learning, you can never go wrong with buying blue chips.
Yep.
They taught me
That's
about
perfect.
they bought me about ETF. They taught me about ETFs, and one thing they taught me about ETFs is that if you want to find individual companies to invest in, go look at an ETF and look at their holdings. They always have their top 10 holdings posted for public knowledge. If you don't know, the first thing you can do is go look at what these experts are investing their money into. You know what I mean? So for me, that's how I started to learn. And then as I developed my investment strategy, then it became about my strategy. So I'm a dividend investor. I primarily buy income. So from there, I started looking at companies that are going to pay me the most income. But the game is still the game. You still have to buy strong companies. I look at things like debt to income ratios. Like, do they have too much debt? I look at revenue. Do they have money? I look at market cap. How much, how big is the market cap that they own? You know, even in their sector. So there's a lot of little nuances in it for the way that I find companies, but on the simplest level, man, just buy good companies. You could never go wrong buying a blue chip.
Kev, you want to elaborate on that? How you
Yeah,
identify, or did he take
yeah.
everything?
He broke it down. Like I said, we both started off similar. The first gem that I ever got when it came to getting into the market is buy what you know, because if you know it and you use it, then you can't go wrong because you know that that's something that if you're investing in it and you're using it, then you can vouch for it. I'm a big advocate of Warren Buffett. So, like I said, I took a lot of principles from Warren Buffett, and that was one of the big ones that he actually had. And then also buying good companies. So my strategy was once I learned what sectors were, because going into it, I didn't know what sectors were. Once I learned what sectors were, I actually went to all of the sectors and found the top five companies in each sector. So with those top five companies in each sector, I know that they are going to be at the top of the food chain. They're going to be the elites. And then I found the ones that actually were within my price range as far as buying power. So that's the way that I started. You know what I'm saying? Getting myself to that particular point. As Marcus said, now that we've been in the game for a while, we understand different nuances, and we have our own strategies and things that we do. Um, I am a big long term investor into blue chips. That's why when Marcus said blue chips, that's why I started shaking my head, because that's generally in alignment with that top five in each sector. Generally, you're going to have blue chips in that particular portion of it. Um, Big on dividend investments as well in ETFs, because The thing about it is once you start understanding the concept of diversifying, you realize that ETFs actually do the diversifying for you. So basically, it makes it easier on you trying to find all these different individual stocks. They find them for you and they manage it for you. So if you're looking for something to balance off and something a little bit more safe with the riskier things that you do, um, you want to make sure that you have your ETFs, in order to basically promote that balance. So that's kind of my concept as far as how I find stocks. And of course, there's different stock tips and points that come across, my table, pretty often. But that's really just the starting point of finding good companies. And then I'm sure at a later time frame, we'll get into understanding that just because you have a good company, you still have to find the right entry points to really, get the value off of it because you don't buy when it's at record time highs and then expect to get, record time, gains. You have to make sure that you find when, the opportunity to be able to buy in when it hits a resistance points or basically, as we say, target prices. Is when you want to get in. So just I wanted to reiterate that portion of it that it's not just about buying good companies. It's about finding those good companies starting off and then understanding when to get in and when to get out.
So, Kev, let's spin off of that because this happens all the time when I speak on stocks or being part of Marathon Capital, especially for the newcomers. What kind of results should you expect from the stock market?
What kind of results?
Yeah, because a lot of people
Well,
think you invest in stock and then you're rich tomorrow. Is it long term, or is it depends on what you're trying to do?
I think it varies, but it also goes based off of number one, what is your plan? You can't go into really anything in life without having a plan. A lot of people just jump into stuff and just want results versus understand that there's a plan and a process to get to the results that you're looking for. Experience plays a big role into it. If you want fast money out of the stock market, then you're going to have to be a day trader. And day trading means that you're going to have an abundance of knowledge into the stock market. And if you don't have that, along with at least 25,000 to start up one of those accounts, then you're not going to make money immediately and fast. This big meme stock, thing with GameStop and things of that nature kind of set a false expectation for some people because they've seen these massive gains and massive amounts of money that people were making, and they think that it's that easy. But you have to have a strategy um, in order to get your expectations. So, as I tell everybody, this isn't going to happen overnight. This is going to be what we call mailbox money, for lack of a better word. If you do this correctly, you're going to be able to make money off of sitting at your desk, or you're going to be able to make money off of doing other things and while you're asleep. And that's the objective that I have for it. So everybody's going to
Right,
have their own plan, but you have to make sure that you know what you're getting into it, or, what you're going into it for,
right,
and make sure that you have realistic expectations of what you're going to get out of it. And ask people, look at the actual benchmarks. Your S&P 500, your NASDAQ, your Dow Jones. What type of returns are they getting? These are experts, and you think that you're going to get more money than they're getting, you also have to understand percentages. The market is based off percentages. So
right.
if I'm making 10 or 15% annually and I'm dealing with hundreds of dollars, of course, it's going to look different from somebody that's doing that with millions of dollars.
Right.
So you
I
so you got to
understand.
keep your eyes on your own paper.
So my next question is, do you think the only way to gain is to hold assets for a long time in the stock market?
Absolutely not. I think, all right, so we're stock investors. Understanding what investment mean, you're like Kev said, you got to understand what you plan for and what's your actual goal with it. Me personally, I invest for the long term, and when I say long term, I pretty much buy stocks that I plan on keeping into retirement, unless something happens with that company. That's why I'm always evaluating my portfolio, seeing what I need to hold on to, what I need to get out of, et cetera, et cetera, et cetera. I think that the more short term style of investing or trading, if you will, requires more knowledge, which is absolutely attainable. Um, but you can make money in a day if you have the knowledge and the investment capital. There's also swing trading where you're making money with anywhere from a couple weeks to a few months. Me personally, I hold everything I buy for at least 5 years. That's why I only buy good companies that have trajectory. But I also buy income. This is all for retirement. I'm buying income, buying income, buying income, buying income. I diversify in terms of making sure that I have growth stocks and then safe stocks as ETFs. But mostly what I do is buy income because my goal, my personal goal is to have enough money coming in from my assets to sustain my lifestyle so I can retire early. That's my personal plan. Um, but I don't think that there's a one size fits all for all investors. It depends on what you want. So my grandfather, he was an avid investor. He was in the stock market, he was in real estate, he was in venture capitalism, he was in a lot of different forms of investing. But one thing he always taught me was don't let the young man spend the old man's money. So he
Mm,
adamant about making sure I'm putting something in my brokerage account every week, not every month, every week. I'm adding a percentage of my income into my brokerage account because that's the money I've dedicated to the old man. So the companies that I'm buying is for when I'm older and I can't physically go make money.
Mm. Gotcha. Kev,
let me
I asked Marcus, I was asking him, do you think the only way to gain wealth is to hold assets for a long time? Excuse me.
Gotcha. Before I answer that question, I'm gonna piggyback off of the last statement that he made. And one of the things that I recommend to all of the people that I talk to is your investment should be treated like a bill. For example, like a phone bill. If you pay $200 a month for your phone bill, then you need to have an actual budget that's set for your portfolio that you put into your brokerage account, just like that, and treat it like a bill. So when you pay that $200 for your phone bill, that $200 is gone. It's spent on you being able to talk on the phone. So when you say you do 300 $300 a month. That 300 is no longer yours in regards to regular everyday spending. That 300 is spent on investing. So once it goes into your portfolio, it does not come out. You know what I'm saying? Now there's going to be certain circumstances that, things happen because one of the other principles that I always say is if you are in debt or if your house isn't in order and you don't have a budget, then you need to get that figured out and taken care of first before you can start truly investing. Because if your budget's off, you're going to constantly be trying to find somewhere to pull money from. So you're not going to give the money that you put into the market time to vest. So,
Mm.
big point that I wanted to actually add to that. Repeat your question one more time so I can make sure I answer it in full.
So I was asking about, do you have to, is the only way to gain wealth is to hold assets for a long period of time?
No, that's not the only way to gain wealth. Holding assets, number one, it depends on the asset. One of the biggest assets that a lot of people are on the fringe about is real estate. But one of the things that I think most people don't understand when it comes to real estate only benefits you and is only really an asset if you're making money off of it. The only way that most people make money off of real estate is either by renting it out to somebody else, Airbnb, or selling it. So if you have one property, one house, you're not renting it out, you're not Airbnbing it, you're living in it, right?
Right.
So at that particular point, the only time that you're going to make money off of that asset is when you sell it. But then when you sell it, what are you going to have to do? You're going to have to find somewhere else to live, right? Because that was basically, what you were using as, as your home. So understanding how to use real estate as an asset is very important if you're going to use that as one of your assets is going to generate income. But as we said, real estate's not the only one. And holding long term generally is going to be for capital gains. Like I said, if you're trying to do a long term play for a blue chip, or even for a stock that may be on the up and coming, you may have to hold that for a longer period of time for you to be able to reap the benefits. But as Marcus stated earlier, you do have the option of going the dividend route. So you're buying income. And with you buying income, basically you're saying, I'm using this money right here and I'm going to make X amount of percentage off of this money. And I'm going to let that keep going. I'm just going to let that keep flowing, keep flowing, keep flowing, keep flowing. So therefore, now I have cash flow, but I still have my initial investment. And honestly, it doesn't get any better than that.
Gotcha.
Tell people, I tell, especially like I deal with a lot of young people dealing with entertainment. I'm a multimedia specialist, and I'm a sound engineer, so I deal with a lot of artists, and they find out what I do, and then they ask questions, which is a blessing. That's kind of the point, you know what I mean? Make your moves, and then when you start making enough moves, people start asking questions.
Mm-hmm.
And I always tell them, I tell them, I said, man, if you don't got a lot of money, the best investment you could make in terms of developing an asset is invest in your education, invest in your knowledge. I ain't talking about paying for school. I'm talking about if you got $1,000 to invest, the best thing you could do right now is buy some books and some classes. Because if you don't have the discipline to even do that, you're not built for wealth. Money gravitates towards the people that treat it the best. If you can't even take the time, if you're not serious enough about it to educate yourself on how money works, you're not built for wealth. You're just not. And it's okay because we need workers too.
Gotta have it.
we
We're in a
need
capitalistic society. You're
we do.
100% correct.
At the end of the day, the people that own the businesses don't achieve wealth without people to work. And I'm not throwing a shot at anybody. I'm being honest. And I think sometimes people just need to hear the truth. Everybody's not built for this. One thing that I know is everybody can't own a business. Everybody's not built and equipped to own a business, but everybody's built and equipped to invest in the stock market. If you can make money, you can invest money. You just have to educate yourself. If you can't invest in a class and the internet's free, YouTube University is free. It is a time investment. A lot of what I learned before I actually started investing in my knowledge on a financial level was just investing my time and learning it because I wanted to learn it. And then, you know what's crazy, guys? The funny thing is when you start learning about it, you realize it's not hard. It's presented as it's presented specifically to our community. It is presented like it is this complicated, hard thing, but it's presented that way. It's marketed that way to keep us out of it. But when you actually start learning about it, you realize it's actually easier than most of the stuff you do at your job.
I second that because this is not hard. But like I said, it is packaged for it to seem difficult based off of concept. But you know what, though? Thing about it, Marcus, is something that you said a while back, man. And it actually is in alignment with everything. Most of this stuff isn't hard. You just get better at it as you go. You just have to be willing to want to know it and willing to put in the time. Time is your biggest investment because with anything, you don't know how to do anything until you actually start putting in the time to learning it and want to know it. There's so many people that I talk to on a regular basis, man, that I want to be rich or I want to be wealthy or man, I want to have a portfolio like yours or I want to do this and wanna. And once I get to breaking down that I look at my portfolio on a daily basis and I do research to see what's going on in the world because current events dictate what happens to your money. You know what I'm saying? If there is
I
a
was gonna
tariff
ask that,
that
Kev. What
my
factors
bad,
influence? Just no, you're good. No, because
my
we
bad.
almost done. I got two questions. I was gonna ask what factors influence the
Hey,
prices of
I'm
stocks.
gonna go ahead and
No,
shoot
yeah, yeah.
over and let
You
you
see
go
in the
because I
future.
can go.
You
Yeah,
see in
I
your
can
future, real quick.
ask
I
your
got two
question, bro.
questions. Yeah, I got this question, another one. We're gonna wrap it up. I was gonna ask that. You can keep going. What factors influence the prices of stocks? And we doing this for people who are learning. Who are new.
Hmm.
We're doing this for them. So because these are the questions I get asked.
The
What
simplified
factors?
answer,
Yeah, it's simple.
is everything factors into it. If we want to simplify it,
Yeah.
it's
Yes, sir.
everything. everything plays a role into it. But if you want me to,
That's
be
clean.
able to dig a
That's
little
clean.
bit more, the main thing that I say is current events. As we just got through talking about from our first question, um, legislative, so laws, political influence, presidential administrations, those concepts. Because the thing about it is, as Marcus was talking about beforehand, it's understanding the game. The game is going to be there, but understanding what group has emphasis on different things. If you know that, this is just an example, if you know that Democrats are going to be really, really big on going green and making sure that, we are preserving, the earth, then when it comes to like EVs or when it comes to different types of energy versus, um, gas and oil and things of that nature, there's going to be a shift when they're in office. Now, when it comes to oil, when it comes to the financial sector, things of that nature, that's going to be more, Republican based because, that's going to be more in alignment with what they're on. So that's why these things are very important to understand what all of these things are about. And then also when it comes to tariffs, if there's a tariff, on China, for an example, and China is the biggest manufacturer of whatever, let's just say if it comes to semiconductors, which Taiwan probably is, but I'm just using this as an example, then you know that there's going to be a issue or there's going to be reaction based off of that. You get what I'm saying? So you
Mm-hmm.
have to understand these things that are going on in politics. You don't have to be a politician, but you have to see what's going on and pay attention to it to know how I need to move now. If I know that the Chinese government is not purchasing any more iPhones,
Right.
then I know that that's going to have an effect on Apple stock. You know what I'm saying? Or if I know that, there was a storm in uh let's say in the Caribbean, and a lot of the sugarcane farms were damaged, then when it comes to, let's just say, rum, for an example, rum's going to be impacted. So when I say everything, that's why I mean everything, but you can narrow it down to other points of it. Also, how the company's doing. Are they making any money? Do they have a lot of debt? Going back to what Marcus was talking about in regards to the things that he looks for. Market cap, you know, all of those things play a role. Also, when it comes to acquisitions, what companies are buying what companies? What companies are aligned with other companies? You know what I'm saying? You have to know this stuff to be able to have a better understanding of it. But one thing about this market, like Marcus said, you can create your own strategy. So you can do it based off of your knowledge base. If you don't want to go that deep into it and figure all of that stuff out, go get you a damn ETF because basically it's managed for you. You don't have to
Mm.
do all of that. You get what I'm saying? But if you a little bit deeper into it and you got individual stocks, you are owner of that company. That's why it's important for you to invest in what you buy on a regular basis. Now you're an owner. I can't speak for everybody else. And like what Marcus said, a lot of people just they're not business owners. If I got some money invested into a company, I need to know what the hell's going on with that company. So I'm going to do the research so I know how to maneuver. So that's the long and the short answer to your question. And I'll let Marcus add on to it or
Yeah,
uh
I mean, I'd love to piggyback on it. Really, it's just going back to what I was saying is about understanding what your strategy and your goal is. Um, because as Kev said, everything affects the market. One of the things that you learn if you're intelligent, you learn to not, you cannot be an investor in this market with emotions. So I check my portfolio every day, but I don't check it to see who won and who lost that day. I just need to know what the numbers are from my person. I need to know what's going on with the companies that I own, as he said. Um,
mm,
but that's the whole point of investing long term because everything does affect the market. But if you buy good companies in the long term, it doesn't matter. If a company you bought went down 10% this month, if you spread that chart out, and that's a whole nother thing, but if you spread that chart out and look at the macro 5 years and all-time values. If it's doing this over time, I don't care about what it's doing in 3 months or 1 year.
Facts.
I care about what it's doing in 5 years. I care about what it's doing in 10 years. That's what I care about. So that's why it's important to understand what you're seeking out of the investment. If you're gonna learn this skill to be a day trader, then you got to be watching the news. You got to know what's really going on because everything really does affect the market. But if you're just investing for the long term, if you're investing for the old man or the old woman, buy good companies, sit still.
Got you.
That's
Got you.
it.
So this segment right here is I Talk Money, and I plan on this being a reoccurring edition with you two brothers and adding some more. So for this first version of this episode, whatever you want to call it, even though this is episode 5 of Bonds Gems, I got a question for each of y'all before we go for the people. I'm doing this to inform people, for my fan base, for everybody, for Marathon Capital, everybody. Each of you, let me get I'm new to stocks. I want to invest. I need a stock for both of you.
Hmm.
And why? I'm ready to invest today. I'm new.
You want me to go first, Go?
Yes, sir.
So they just split. Um, as far as I'm concerned, with the research that I've done and the performance that I've seen out of them, right now everybody knows AI is pretty much the future of technology and how we look at the world and how we process information and how we find information. They're actually we never thought we'd see anybody really impact the internet search part of the industry. We thought Google had that sold up, and now even AI has penetrated that. Google's trying to catch up with that. I listen to Motley Fool every day, and one thing they was talking about was like, we haven't seen this before. This is something that we
Hmm.
never thought we'd see when it came to internet search. I know Google is a tech company, but everybody goes to Google to search. So the company that I think that everyone should be buying right now, if you have extra money sitting around, is Nvidia. The ticker is NVDA. I think right now, if you don't have Nvidia, you are tripping.
Okay. All right. And Kevin, before we go,
Well, this is why this is my brother, and this is why our stocks and securities branch or department is as elite as it is, because he literally took what I was going to say right out of my mouth, because I was definitely going to say Nvidia was going to be my recommended one. With him saying that, I'm going to go a different direction. I am going to go for somebody newly starting off. I'm not going to give you a stock. I'm going to give you an ETF, because
okay.
that's going to automatically diversify it for you. So my recommendation would be Invesco QQQ. I'm gonna give you two, or VOO.
Okay.
Now, like I said, they're a little bit higher. Like I said, so as an entry point, don't let the price of it scare you, because the value of what you're going to get out of it, and then the balance of the portfolio is going to help you get started. So therefore, you at least got some money in the market and give you time to do your research for something that's going to consistently do this. So that's what I'm gonna give you.
Oh man. All right. So that's what we got right there for the people that's new. And like I said, we're gonna come back with some more. I want to give a big shout out to my sponsors, Vion, by Sovereign Brands, the best liquor in the world with a hint of cognac. Payne Mason Cigars. If you smoke cigars, you go on PayneMason.com, use discount code Barry Bonds, get 10%. Best cigar I ever smoked in my life. You can trust me on that. Y'all want to get y'all socials up before we go? And the Marathon Capital website?
Absolutely, man. You can follow me on all social media platforms at Oblique the Architect. That's OBLIQTHE Architect.
Gotcha. I'm gonna give another shout out to the best cognac blend Vion. Um, like I said, I actually got a couple of bottles in there now. Shout out to Payne Mason Cigars, one of the best cigars that I've smoked as well. So I've actually had the opportunity to have a couple of their cigars. But I'll just give my Instagram, because you have access to all the other ones from there. So you can find me on Instagram at the THA Gold, GOLD, the letter N, and then one. and you can actually follow Marathon Capital Investments in regards to the work that we're doing at www.marathoncapitalinvestments.com. And we are also available on Facebook, Marathon Capital Investments, Instagram, Marathon Capital Investments, and also LinkedIn, Marathon Capital Investments. So there's multiple ways to get to us.
That's it. We coming back. We gonna be back, man, because we talking money, and we
Yeah.
need y'all out here.
I gotta be back on here, man, because I still got
Yeah.
something to say.
Oh yeah, yeah. We got more to do, but I'm glad y'all came on. We started this, and I'm
Hey,
happy.
man,
You
go
know,
make some money, man. If y'all watching, go make some money, man.
Make
that's
some money.
right. That's right. Trust me, people. They made me money. They like that. That's right. All right.
Yes, sir.
We out of here. All right.